Good morning, guys. Welcome to this Friday, March 28th. Happy Friday. Looks like we have some weakness in the overnight. Not, we had fortunately the strength they had going into that last half hour. Yes, they did not hold up. They kind of started heading lower. They closed towards the lower end of the range. Not quite in the lower. They made lows, but definitely at the lower end. So far, the overnight has just been it's just been weak. Uh, well, before we get into that, today is Friday. Happy Friday. We get the personal income number today at 8:30, and in there we also get a PCE index. That's the inflation rate the Fed watches. And so personal income, the PCE read, we'll see how that comes out, and that could be a market mover. We'll see if how that shakes out right now. Then at 10 o'clock, we get consumer sentiment. So 8:30, 10 o'clock, we have news. The 8:30 news is important. That's where we get an inflation read. Uh, but looking at this overnight, so yesterday we pulled back pretty hard. We had well, the day before yesterday, Thursday, where we had a bit more of a holding day down here. We were down, then we were up, and then we were slopping around in the middle, and now we kind of ended up on a low note overnight. That's been down here testing the lows, taking out the 57.20s in the overnight, probing 57.10s. So we're right down here again, right at that volume edge, and it looks very, very likely that they can take this lower. So I mean, it's not quite there yet, but we are against this support area right now, the 57 20 to 40s. We are right in that area now. They probed the 57.10s, but they are a little bit above it now. So unless we get a little bit of lift today, we probably right down in this doldrums area again. We had to write off the little rally here from this week as just a one-off or a failed attempt to take it higher. So that's where we are. This gap is closed right now. I can fold that back together. Oops. I'm going to split out the F here and then fold this get back together. So this is kind of where we are at right now. And if I fold that together, and leave it like that now. So I'm just going to leave that F split for a second here so we can watch this. But this is all about the gap right now. And then yesterday they closed the gap, and right now we've been probing below it. We're trading right in that gap right now, and that right coincides with that support area right here at the 57.30. So we'll see. At this point, it can go either way. Now, if the PCE reaction is negative, we'll be right back in this lower range again, probably in a spot where we can run down and maybe even test the lows here. And if the reaction is positive, then we may have a shot at retracing this to the upside. We'll see. So it's a Friday, and it's getting really close to the end of the quarter, end of the month. To be over one trading day after this on Monday, and then we are in the second quarter, and then we get earnings and all that stuff start coming out again. So a lot of stuff going on, a lot of cross currents. We have that the auto tariff is on right now, and we'll see how these things shakes out. Now, my view on that is I'm not too worried about the tariff side of things. I think if it's more of a reciprocal kind of tariff setup, we'll see tariffs come down across the board. There's no point of paying more for something if it's kind of reciprocal on both sides of the fence, then it doesn't protect anyone. So if that's the case, the case to lowering barriers is right there. But then again, we're gonna have to go through the motions of seeing how those tariffs gets shaken out, how the economy reacts to it. And right now, the market, I think, is overreacting in a big way. I think it's just a lot of fear about change, which is right now in the market. So at this point, I'm going to start a range bound. I'm going to start with a slight bias to the downside. If they trade up above that 57.50s, I'll take off the short bias and going back range bound. But at this point, I'm going to be looking for short setups against the 57.40s and 50s for rotations back down. I'm going to be looking for buying opportunities again, the 20s and the 10s for rotations back up again. So a pretty tight range. If they trade up above the 57.50s, I'm going to go back range bound. And then, of course, above the 57.80s, if they can manage that, and then we may be right back on the long side. Below that 57.10s, I'm just going to stay on the short side and see how far I want to run it. The obvious attractor area is going to be down here at the 56.70. So that's going to be the next, going to be these levels down here. That's going to be your next attractor area on the downside. That's that modem, that lower price, that lower distribution. So that's where we are, and it is right in the twilight zone, I would say. Right in that area where they can break up, they can break down. At this point, chances are we are probably going to be down in that lower range, but I'm never going to rule out the chance for a nice little rally. So the way we spot that rally, first you had to get up above the 57.50s, take off the long bias, go back range bound. Still looking for shorts against the 60s, 70s, and 80s, but above 80s. It starts trading above there, 57.80s. I think we are in good shape to extend to the start retracing this back up here again. So that's how we get started. So a couple of different options. A lot hinges on how the market reacts to that PCE index as we come out of, as we get it. But this whole range on the downside, there could be a level right there. I'm gonna pop it in. You see this little high volume node right there in the middle. I'm gonna do that right there. See that from this distribution back there. And that could be a spot where we find some support, but below the 57.10s, I'm going to be on the short side of this, looking for moves to the downside. And the attractor down there is going to be a little bit lower down here at that 56. This little volume node you see there, 56.70. That's where I think they're heading if they take out that 57.10s. So we are right there, twilight zone. Let's see what's going to happen. Looking at the NASDAQ and the bonds. Let's see where are they? There they are. So the bond market is not doing much. It's just turning back up again, back up towards the 116 attractor. So they were down here probing the 115s. Yesterday, yesterday's day session held. It traded back up again. And you can see the bond market in an orderly fashion running down, testing support. They're right down at that low volume area right now. I think the next attractor is 114, 20, 24. But so far that low volume area held 115.10 held, and we are trading right back up again. So remember, don't forget, the high volume areas are attractors. That's what people mostly talk about. Low volume areas are as important. They stall activity. So just keep that in the back of your head. You see a low volume area in the market approaching it, chances are they're going to stall. I mean, usually you need a piece of news to drive to kind of bust through it. So we probed to the downside, trading back up again on the bonds. So I would just start off range bound at this point. I would look to sell strength at 16, 16, 16, 16, 25. And looking to my weakness, 1604, 16s, and down to the 1525s. So they're staying in that range. So our short setups up to the 1624. Look to buy against the 1526s, and then buy on the support on the way down there. And that's pretty much where we get started. So starting off with the range bound bond market, let's see how that reacts to the news as well. That could certainly be a reaction from the bond market. On the Nasdaq, Nasdaq is the one I'm a little bit most concerned about, to be honest with you, because that one took a leg lower. So that one is down here now. They're taking out the gap. They're down right to this attractor at the 870s. So weak overnight on the Nasdaq. We are back in this lower range again. So Nasdaq kind of can drag the whole thing with it if they start heading lower. So we'll see if they can make it go out of it, or if you're going to see a nice sell-off day and see it run right down here to test these lows there. So we have support down here at the on these lower edges at, well, we have it in the next attractor is going to be 690 to 700, and then thereafter we have an edge and an attractor at the 460s. So I would just I would start off Nasdaq on the short side actually. You can stay a little bit below the gap right now. So I would look to sell strength at the 960s, 20,000s, 20,040s. If they can get up about the 20,040s, I'm going to go back range bound, and if they stay where they are, I'm going to just look for short opportunities for rotations back down again. So I'm not going to be very aggressive on the buy side on the Nasdaq until we see a little bit of strength, at least taking out the 20,000 the session highs. But to get confirmation, I'm going to wait for that 20,040s before I start looking at long opportunities on Nasdaq, or should shift my bias back to range bound and start looking for at least a little bit of strength at that point. Even if you're shifting back to range bound, we're still looking for shorts against the 120, 150s, maybe up to the 190s as well. So we got some range to make up on the Nasdaq for this to turn into anything like a little rally. And that would be basically taking out that 160, that four-letter edge. If they can do that, that's the way right up here. If that can happen, we have a good shot at trading right back up again. But at this point, we are down in this lower area again, and that just implies range-bound trading or lower prices. So that's where we are. So Friday, getting in there could be an interesting Friday. Then finally, oil and gold. So we rolled gold to the June expiration, and look at that. It's always interesting to see the gap up when you roll it. Now you can peek ahead and see that it's going to be rolling a gap up like that, but look at that gap. So we made some new highs going into the end of yesterday. It's above the 3060s. We gapped all the way up to the 3100s, and we have not looked back. So we'll see. I mean, if they take out this 3095 support area, the gap up, we can see a nice retracement trade on the downside. But most of the time when you gap up like this, you get some continuation to the upside, at least for the first couple of days. So I'm going to start off range bound with a bias to the upside, looking to buy against the 3110, 3108s, 3100s, 3095s for rotations back up. So gold almost doubled the value the last it was like 3 months or so, 2 months, 3 months. It's been one crazy run on gold. But then remember, so if you go back down here in gold, you can see how this whole thing has been absolute. Here's the last gap out. They gapped up and never looked back. All right, that was 2,700. So we have been up here like the 2000, all like pretty crazy run to the upside. And that's an old one. Oh, there it is. So that was an old level right there in the middle, the mistake. But you can see how they been steadily moving this higher. So this is all, the only explanation is, well, two things. You remember that BRICS discussion we had? They're still out there. They've been buying gold like crazy to back up their new currency setup. So that was one driver of gold. And then, of course, there's been a lot of bank buying of gold. And maybe because they're concerned about the financial system or something else, but there's been a lot of gold buying going on. And so prices are up. So that's gold for you. Big gap up. Let's see how far they can take it. I would not be necessarily looking for a gap closure today. But if they start taking out the 3095s, then I'll look for it. So chances are we'll see, or most of the times when it gaps up, you get some continuation. But it is the opportunity is there for a gap closure. So if they start taking out that 3095s, I would definitely be on that short side. But it's not. It's going to be taking that out and a little bit of continuation as well. Very volatile right now in gold. A lot of big bars, a lot of choppiness back and forth. And then finally on oil. Oil pretty much range bound. They're holding around the $70 right now. Not much to say about it, not much to trade about it. It's just not moving a whole lot. So kind of a boring market to work with right now. If you want to trade it, just trade it as a range bound market. Primarily look to sell strength at 70.10 up to the 70.50. Look to buy weakness 69.50 down to the 69.10s for rotations back up. So pretty tight range, but that's kind of oil right now. And I promise you, once something happens on oil, you get some clarity, we'll probably see the things start heading lower in a big way. But right now, in a holding pattern until we get some of these hot spots in the world put out, and get somewhere up and the new production online. So once that starts happening, everything starts coming down again. All right, so that's oil and gold. So trade gold from the long side, oil range bound. Back to the ES, and we are kind of holding in that volume weighted mean level. So we'll leave it there. So Friday, looking at that PCE number, starting off range bound on the ES, looking for early weakness. Above that 57.50s, we take off the short bias. Nasdaq, we are definitely short, leaning short on. Let's see if they can make a showing here late in the day as well. But on the ES, watch that level, the 57.50s. That's going to give us a sense that we may not be heading lower. And on the Nasdaq, they can have to get up above that 20,040s for that to occur, 40 or 50s. All right, so that's how we get started. So good trading, guys. And I will see you back at 11:30 for the next update. Ready? Later.